You've got two traders with the same skill set with a very similar strategy. One is able to scale to millions, whilst the other one struggles to gain any sort of consistent profitability. The issue is not strategy, it is not skill set, it is definitely a psychology issue. Okay, we got two traders with the same skill and the same strategy, okay? But these two traders, they come across a completely different outcome. One is able to scale to high capital, while the other stays stuck, maybe able to make some profits in the short term, but nothing consistent and nothing really scalable in the long term where they can make life-changing gains. Now, the difference here is psychology. To be more specific, it is your perception of worth in terms of how you perceive your worth relative to the money that you have on the line, right? Now, let's take Trader A. Trader A, he is a slave to money. He is controlled by fear, he is controlled by greed, and he is always hesitant when it comes time to execute, right? Now, let's take person B. He is a master. He is a master of money. The reason why he is a master of money is because he is process oriented. He executes his plan without any fear, without any greed, without any hesitation. And he is also detached to the outcome, whilst person A is very attached to the outcome, and he allows the outcome to impact his external life and his decision making inside and outside of trading. Let me introduce you to the pedal steel effect. This is a psychological study which highlights that whatever you idolize or treat as extremely important ultimately gains power over you. This creates the fear of loss, which inherently creates irrational behavior and decision making, which then leads to the loss of ability to perform to your maximum capability, right? So this means regardless of how seasoned you are as a trader, if you are putting a 100K account on a pedestal, if you are putting a $1,000 drawdown on a pedestal, then you're not going to be able to perform to your best of your ability, and from there you are more likely to lose because of this trickle down effect. Something like a simple job interview, right? If you have a job that is completely out of your league, you're going to become anxious, you're going to likely have a fear of failing that job interview, and you're not going to be able to perform in your true self because of that inherent behavior that you're idolizing, right? And you're not going to be able to perform to your best ability because of the way you're feeling and because you're idolizing the job. But if you went into a job interview that is much below you, something that you are very familiar with and maybe something you've done before, you're going to be able to act freely, calmly, and confidently. And before we move any further, I do want to mention that that is often why you see people who come from wealth, whether the parents are very wealthy or whether they just they didn't struggle with money growing up, they tend to be able to perform much better simply because they don't have this pedestal effect with money, and they have a healthy relationship with money where it was never a problem. Maybe they never watched their parents fight over money, they never watched their parents stress over money. So to them, losing 10,000, 15,000 is not a big deal, not because they necessarily have that wealth, but because their relationship with money is not one of idolization, and they don't have the fear of loss, and they're able to perform to their best ability just because of the inherent nature with money. So now this pedestal effect that we just discussed, we did give a real life example with job interviews, right? But this exact same things applies to trading and trading capital. So for example, this is level 1 where everyone starts, and where the majority of people, unless you're in a third world country, you're able to master this level very easily. But unfortunately, mastering this level is not really good enough because it's not going to give you any meaningful impact in your life, right? So let's say you have a $1,000 account, you're risking 1%, 2-to-1 risk to reward, which is pretty standard, right? And with 1% risk, you're risking $10, right? And the average person does not have a fear of losing $10, and there is also no excitement of winning $20, 2-to-1 risk to reward. So the average person is a master of this level. Okay, level 2, very similar example. You're risking $100 from a $10,000 account because your risk is 1%. And from there you can make $200. And generally speaking, maybe 50% of people are okay with this level, and they've mastered this level. Now, as we go down to more and more levels, that's where it gets much harder, and we'll go through a few more examples. Now, it's important to understand that this pattern is repeatable at every level. And for this example, we're at level 3, where a person has $100,000 capital, they're risking $1,000 per trade, and they do have a fear of losing the $1,000, and they do have excitement for winning the $2,000. Sorry, let me fix that. Okay, so now what this does is this brings us back to this pedestal effect over here that we discussed earlier on. So now this person is in this pedestal effect, and he is a slave. He is a slave to this level because he is not able to control his performance, because he has a fear of loss, and he's acting out of irrational mindset, right? Because he's idolizing this level, and he's extremely over conscious of this level, and he's not able to perform to the best of his ability. And that is also why a person that does come from money, their pain tolerance is generally much higher, and they're able to progress through life a lot easier. And that's why I do agree with this idea that people that do come from a wealthy family do tend to kind of struggle a little bit less than the average person, simply because their relationship with money is different, right? We already discussed this. So the solution is to eventually neutralize emotional reaction to the large numbers, become process oriented, and become obsessed with the process to the extent where you're following the process religiously, regardless of the outcome that occurs, right? So if you go into, let's say, if you go into level 3 and you feel yourself that you're a slave to this level, and you have a fear of losing the $1,000, the moment you do lose the $1,000, you must program your mind to not feel the emotions and to not act like a slave to this level, right? Remember how we mentioned you begin to act like a slave because you start hesitating, you become attached to the outcome, and you have a lot of greed and fear, right? Just like the job interview, you do not want to be too attached to this level, and you want to always neutralize the emotional aspect of it. What this does is this removes the fear of losing. It removes your attachment to winning that particular trade, because being too attached to winning will eventually just lead to losses sooner or later. And ultimately, it removes the slave mindset, which is what we discussed earlier on. That is why the solution is to simply neutralize your emotional reaction to large numbers. And that is why people do mention that meditation is very, very important, because it allows you to kind of envision yourself losing, and also practice the outcome without having quantitative measures being put in place, right? So without losing the $1,000, you can actually practice that feeling, right? And that way you can get over that feeling a lot quicker, because the more often you practice that feeling, that emotion, you can eventually get over it, right? So it's important to understand that traders fail to scale because they continue to be slave to the particular level that will be life-changing to them. The moment they stop being slaves to that level, they're able to act naturally, and they're able to perform at a much, much, much better level, and then they can scale. It's important to understand that no matter which strategy you have, right, you can have the best strategy in the world. Eventually that strategy is going to break under pressure, right? Basically, unless your strategy is a very manual strategy and it has a 100% win rate, which is not possible, it will eventually fail to the slave mindset. That is why people that argue whether it's trading is strategy oriented or emotional oriented, it's actually both. But the best strategy in the world will always fail to the slave mindset, guys. That's very important to remember. It's important to remember that as day traders, we do not rise and we do not scale with our strategy, or we do not scale to our strategy's capabilities, but we scale to our emotional tolerance to the money that we're dealing with. That is why scaling happens when numbers stop carrying an emotional weight, right? So when these big numbers stop carrying an emotional weight, you're able to scale effectively. So your job as a day trader is to do everything possible, which is have a very good process in place and practice detaching from the outcome in order to eventually be able to scale to the big leagues, guys.